Hi, good afternoon, everybody. What's up? What's up? Nice, Rich. I don't know what that one is, the track data. All right, let me do the disclosure. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer, and member if and reciprocal of my trades are placed through T3 Trading Group, you should carefully consider whether trading is suitable for you in light of your own financial condition. Thanks, TT. My position disclosure here is pretty on the light side. Only 10 positions. It's definitely on the light side for me. But it feels good. I feel nimble. Continue to put some day trades on every day. My day trading success rate's been pretty darn solid. Not huge amounts of P&L, but been loving the consistency. All right. So, what happened today? We had a Red Monday. First Red Monday since August. Can you believe it? Well, that's a hell of a statistic. I'm glad we broke that streak. The streak was starting to annoy me. Market closed down like 0.9% or so. It looks like we bounced a little bit from where we closed. The Q is probably down like 0.8% or so, a little bit more than that. The IWM down 1.9%. So not only was it a Red Monday, it was a pretty nasty Red Monday. IWM 1.9% is pretty gross, and that's what that short-term composite indicator we look at was already kind of flashing a buy signal with a 5. So we'll see where that is tomorrow. I wonder if this down move today was enough to put short-term tactical in the red. We did rally a little bit into the close, but otherwise, kind of a nasty red trading session. And crypto continues to get destroyed. Bitcoin down 2.4%. Ethereum down 3.7%. Solana's down 6.5%. Those charts look gross. Let's take a quick look at the daily charts of these crypto ETFs. Break of support at 60, break of the bear flag at 56.50. This was a day 3 continuation of the downside. I really don't like any of this stuff, but we're due for an oversold bounce. So maybe tomorrow, if we get into like a day 4 or day 5 on Bitcoin, is finally the day to look for a little bit of a bounce back trade. I think that there were traders out there, not really on our team so much, but people I've chatted with a little bit who aren't on our team, who are trying to come in and buy the crypto dip like this morning. It clearly did not work out for them, but you're starting to get a lot of downside extension here as this stuff just gets slaughtered. Crypto's taken to the woodshed. Over to the market, though, the market is still kind of a battle of flows. We had a weak day today, but weekday, red day, but we are still kind of neutral, I think, when you're looking big picture at the S&P and the NASDAQ. If you look at the IWM, this Russell's looking pretty gross, it's looking pretty bearish, and the RSP lost a major support level today, and it lost that October 10th low, at least intraday. I don't know if it closed below it. So starting to see, a lot more damage in the individual stocks than you are at this point still in the SPYs and the Qs. And I guess that just means that Mag 7 is still somewhat saving the day, somewhat holding the market up, with some but not all of those names trading okay and holding in, right? Google, don't love that upside tail on the Warren Buffett news today, but still basically at all-time highs after today's trading session. Or Amazon, not great, but really this is just a gap fill down into 230, not necessarily the end of the world either. Meta obviously looks really gross, but NVIDIA continues holding fine. Just an inside day for NVIDIA, still holding above support. So I guess really the AI trade is still somewhat intact. That just increases the importance of Wednesday, right? We're seeing the whole rest of the market, most companies out there are starting to trade really badly, but every day you get a NVIDIA or you get an Apple or you get something that seems like it holds up the Qs and to some degree the SPYs even still. If for some reason that NVIDIA report were to flop, I'm not saying it's going to, I have no idea, but if it were to flop, especially given everything that's going on right now, it could be really damaging to this market. So just further increasing the importance of what happens on Wednesday. But, another negative day for the market, and it's impressive that the market's able to be this week given where we are in the month of November. What is traditionally the most seasonally strong month of the year is so far probably the weakest month that we've had, and we're only halfway through it, but the weakest month that we've had since the April low. I've talked about it a bunch in the past, but it really seems like this market over the course of the last year plus has taken a lot of our traditional seasonality stuff and kind of thrown it on its head. I would actually, it's still an interesting market because I would think that with some of the stuff we're looking at, right, at all of our reasons why the market should go down. Originally, we had cited 4.5 reasons, but if you read the Scott Rubner's latest note, he's really citing about 10 reasons why the market should go down. So you got all those reasons why the market should go down, but it's so hard to happen into the end of the year when you're already positive on the year, when you got the corporate buyback bid, buying, $7-8 billion worth of stock a day right now that continues to just be really supportive of this market overall, and that's why dips are continuing to be bought. But it's a battle of flows. We really are getting near to triggering or potentially have already triggered some of these CTA flows. The Goldman note, which was in Pat's note, I want to see if I can just pull it up to confirm what the number was again. 67.25 is kind of the starting point for the CTAs. They reference this medium-term area at 64.40. So like 6,500 area for the S&P is still really important. But 67.25, that did trigger today. The Bank of America number starts at 66.69. So we traded below that today, the Bank of America number, but closed above it. So we're kind of battling that zone, depending on which bank's model you're looking at of the CTA triggers, and that obviously brings on selling. And the CTAs have been sitting at, max long exposure pretty much. But we actually saw an expected bid from vol control today, even in as much as a 1% down move, which is almost what we had. There was still a bid coming in from vol control. So vol control it was supportive today. I would say overall it's probably a good bit more neutral now, depending on the day, than it had been. There's room for vol control to unwind further, but there's also room for vol control now actually to get bid up back a little bit further as well if realized volatility were to come back down and stay low. So that's one that seems like it could go either way. The CTAs, the risk is clearly to the downside, and it's beginning to trigger. So the question is, can the CTA flows overwhelm the corporate buyback bid, and how much realized volatility are we going to continue to get over the course of this month to see the impact on vol control? So I think when you think about this market from a flow of funds dynamic, obviously November is very seasonally bullish, but it's hard to look, I think, at the flow of funds right now, at the market dynamics right now, and garner a really strong edge from it. I think we talked about this one day last week, or definitely one day within the last 2 weeks, that I find that the biggest edge with this market dynamic flow of fund stuff that we pay attention to is when everything really lines up together. When we almost had it in October, but we didn't quite get it, right? Like if vol control can trigger CTA flowing, selling, especially if that's happening at a period of time where the corporate buyback bid is not as strong, and you can trigger the market to go down enough into a negative gamma environment, that's how you create the when crash bigger sell setup. And we definitely don't have that right now. We don't have confirmation across the board from all the different market dynamics that we look at. And we don't have confirmation across the board from the technicals as we look at them either. I'm still looking at an S&P and a NASDAQ that I would consider to be broadly technically neutral. I think if we get below SPY 660, you'll get into the bearish neutral zone, and you got to get below 655 to get technically bearish. So it's a trickier market here because the flow of funds data is mixed and the market technicals are neutral. But I think what that generally means is that you can buy dips and sell rips until we break through support or resistance to get a clearer idea of trend continuation or trend reversal. And that's, generally what you want to do in a little bit more of a range bound market. On a more microcosm of that, on the smaller time frame here today, just with some day trading that I was doing, I was really kind of trying my best to work this range that we got stuck in for an hour between like 10 and 11. Really was looking more at the Qs and the SPYs, with 610 acting as resistance and 608 kind of acting as support. And while we were in that, I wanted to push for the downside because I thought we could break, but also I was like, all right, I'm covering some profit every time we get down to the 608, and then I'm reshorting every time we get to 610. And I feel like I did that like over and over and over again, and then finally got the break lower and was able to kind of cover more from a day trading perspective. So the bottom line is, if you have a more neutral market technically, if you have a more range-bound market technically, you actually want to be a little bit less greedy on your overall targets. You want to book profit a little bit earlier. Traditionally, in a range-bound environment, when the market looks like it's going to break out is exactly when it's going to go down, and when the market looks like it's going to break down is exactly when it's going to go back up. That obviously continues to last that way until it doesn't, right? Eventually you get a break of resistance or a break of support that can help resume a trend, and we can look at like some underlying pieces of information to try to give us a better understanding of the timing on when a support or resistance level will actually break and will actually go, so that you can go from having a game plan that is less greedy and just trying to take advantage of range-based trading to a game plan that's a little bit more greedy, because you go, oh wow, the market just broke support, it just broke resistance, and we can look for further continuation and further follow through. So yeah, I mean, that's pretty much it from the index level. It does still seem to be that the Qs have the overall strength. The IWM is concerning. RSP is concerning. Non-profitable tech continues to be gross. This stuff can't really bounce back for anything. These quantum names just are oversold. They can't bounce back. Most of these crypto names are oversold, but they're also really, really struggling to bounce back. I do think at some point, like I was just saying, we're going to get a little bit of a bounce back in some of these oversold stocks, and we should look to try to take advantage of that. And then the bigger question will be, are we looking to short that bounce back? And for the moment, I think yes, but we'll take that as it comes. And that's really all I got. I don't think I've got a whole lot new to talk about today. It's notable that it's a weaker trading session, but it's still within our overall neutral range, so nothing has really changed. It's just a matter of, are we actually triggering the systematic CTA trend following sell trigger or not, and we're kind of right around the borderline there. That's all I got. From Mike H. I shorted TQQQ on the way down versus highs at 950. On the way down versus highs at 950. I think I was shorting there also, if I remember correctly. I covered most of my risk because of a good fill and then a game plan to be greedy. However, I got stopped at 106.62, 106.62. Is that into this afternoon up move? No. Was that on the 955 candle? The same candle you got stopped out at? 106.62? Must be. Even though that stop ended up being laughably annoying, I'm glad that I followed my plan. I'm glad you followed your plan too. However, what I really struggle with is I still liked the idea 2 seconds later when it breaks back down, but I know myself well enough that I don't do well with multiple attempts. It's great information. So I have a personal rule, presumably, against taking multiple attempts. Any advice in particular for improving the issue of having general trade ideas be solid but getting stopped, and the general idea working while also avoiding the trap of too many attempts? Yeah. That's not the high of the day. Yeah, there's nothing you could do about that. There's absolutely nothing you could do about that stop. So a couple of things I would say. One is we work on a game of probabilities, And inherently, when you work in a game of probabilities, anything that can happen will happen given a large enough data set. So you're going to have those times where you get stopped out at exact highs and exact lows. The question that you need to ask yourself is, did you do the right thing, and would it be consistent for you in the long run if you did that again tomorrow? And I think that the answer here is 100% that you did the right thing with that stop. It was hard to have conviction at that high. I know I called out the short up there and I was involved in it myself, but it was really hard to have conviction. I like that we got extended kind of into a little bit of resistance from Friday's session, extended a little bit. That's why I kind of liked it. So I put the trade on as well. But you need to either have a very firm hard stop, or you need to be so light in your position that you don't need to have the firm hard stop, because if this thing just ripped an extra 75 cents against you, it's not going to be a big deal to you because the position size is small enough that it's okay. And then you can continue to watch the position and add to it at the right time, or work the position as you will. So I don't really have any other advice on this trade. I think that you did the right thing. You put stop in at the right spot after it was attempting to create that pivot high, and just, pushed you out literally to the high penny before it worked. And it's just kind of the way that the cookie crumbles there a little bit. I really like your idea. I just want to compliment you again that you know yourself well enough to know that you can fight, that you sometimes are a fighter, and that you fight stock too much. And I've been there many times where it's like I get stopped out of something, and then as soon as it moves like 7 cents back in the direction that I originally was positioned for, I start telling myself, like, oh, I knew it was right, and then I get back in, and I get stopped out again, and I get back in, and I get stopped out again. The next thing you know, you did it 5 times, and you lost more money than if you just shorted it and gave it a whole $1 worth of room or whatever to begin with, right? Because of the reshorting at a lower price and getting stopped out at a higher price, and rinse and repeat over and over and over again. So I think it's an important rule for traders to have for themselves in one form or another that will prevent them from overly fighting stock. And what the rule is, you need to know yourself. So for you, it's one attempt. I got it or I don't. For other people, it might be, I'll give myself 2 or 3 tries maximum, whatever it is, in a stock. But once I hit that 3rd try, I'm done. I almost like your rule better because it's hyper disciplined. I feel like when you give yourself the rule of I give myself 3 tries, it's so easy to do the 4th try anyway. I feel like it's almost an easier rule to break if you allow yourself to do 3 tries to sneak in the 4th than if you have a very hard rule of I get 1 attempt. And, a second attempt is such a very, very clear, obvious violation. Whereas if you give yourself 3, sneaking in that 4, it's like, I already did the 3 anyway, so how much worse is the 4? And it's a bad idea. So I like it. I think you're doing the right thing. I wish I had better feedback for you outside of just giving you compliments, because I don't think there's anything else that you could kind of do in this situation unless you're so light that you can give it significantly more room. But the flip side of being so light is that if this then worked, you don't have nearly as much stock to be able to make money from it. So I hope that helps as best as it can. Probably not an ideal answer, but that's kind of all I got for you on it. From Vincent, how did you come up with the 190 handle on NVIDIA? Was it the previous day's high? So presuming from my idea this morning when I said in my watch list, shorting 190 to 192. So 190 has been a little bit important on the daily chart. Going back to October, it presented itself as a little bit of a level. Not nearly as important or as clean as the 180, but 190 has been a little bit of a level. 200's actually been a little bit of a level as well. So every $10 in this stock has kind of presented itself as like a little bit of a bigger picture level. So I think it was just a combination of knowing the bigger picture level, knowing that on Friday, though, it went as high as 191, and then knowing in the pre-market, I think in the pre-market it was up to like 192 really early, because if you remember, very, very early in the morning, the market gapped up pretty big, and the futures were up overnight. Yeah, so NVIDIA was trading as high as 192. So when I presented my idea in the morning meeting this morning, I said I like NVIDIA short versus the 190 to 192 area is really what I said. And then by that point, when we were doing the morning meeting, it was down so much that I think I was like I think I just might have said outright just 190. You know, a lot of what I do when I'm doing my pre-market research is I'm coming up with ideas based on daily charts, sometimes daily charts in combination with news. So a lot of times those daily chart levels they're kind of ranges, they're kind of zones, they're not necessarily perfect. I want to get the idea out there, and then a lot of times what you need to do is you take that bigger picture idea of, hey, I like NVIDIA short versus the 190 to 192 area, and then you break it down to the smaller picture. So Josh actually had a fantastic call out in the VTF today to short NVIDIA versus the 950 call, 950 high. And I think that this is the perfect example of what we're trying to do as a team when we start with our morning meeting, where our information is somewhat limited because you have no idea what the intraday chart looks like because the market's not even open yet. And then you take the bigger picture research and game planning information that you derive from the morning meeting, and then when the market actually opens, then you break it down sometimes to the smaller time frame, the smaller picture to get your trade execution. So if the bigger picture idea is, hey, I think we can look short NVIDIA versus 190 to 192, you know, kind of broadly speaking. So as long as it's below 190, maybe you can be looking for signals. And then you get this opening bounce back into the equilibrium zone and a shooting star at 950. That's a perfect technical spot to put a short on a 5-minute chart that coincides with the bigger picture daily chart that we had already kind of discussed in the morning meeting. So that's really the goal of what we're trying to do when we're combining our morning research, morning meeting, and actual trading into a broader game plan that evolves based on the price action and data as it presents itself. So, you know, just a great combination of things there. I would have loved this NVIDIA candle to have a little bit of higher volume on it, a little more confirming volume, but otherwise it's a pretty excellent trade, I think. So yeah, no problem. No problem, Mike. What else, guys? I don't mind doing a quicker one. I got to get back to New York City, but I've got time before my train, so I don't mind answering questions if people have them. But if they don't have them, I don't mind doing a quick one either. All right, I think it was a good morning. You know, I think we had some pretty good day trading calls this morning. I had like a 100% hit rate on mine almost, so, and that's the second day in a row for that, so that's pretty good. Not doing it too big, but you know, a few bucks here, a few bucks there, adds up over time. So good teamwork, good communication today. We actually had a red Monday. Who can believe it? Let's see if it's setting us up for more red this week, or if buy the dip mode is in play and we're gonna work our way back up. Have a great night, everybody. I'll see you all tomorrow. Oh, someone's sneaking in a question real quick in the YouTube. Sure, I can. From an arm. Can you look at Palantir? It seems like it's refusing to break the 170. Yes, I can look at Palantir. 174, I think, is actually the bigger important level for Palantir, and starting to hold below that. That was the bigger level for most of the month of October that it was holding the support. It got below that, but, you know, think about what the market did. The market on Friday gave a massive oversold bounce from downside extension, and so did Palantir, which makes sense. But that bounce back didn't recover anything. It didn't make the chart get bullish. It didn't get back above any real levels. It didn't get back above the moving averages. If anything, like the market, Palantir got extended to the downside. So, you know, the 174, I think, is the big level. But the 80 EMA is still at 179.50. The 21 EMA is at 130. You have an inside day today. The high of the inside day is around 174. I think if we can get more sideways action here, it sets up for another great short, or from more of a momentum perspective, an inside and down tomorrow could be shortable. I take a little bit of pause when I say that because I'm a little bit concerned by how far up the 80 EMA is on the daily, that this needs a little bit more time. But for pure momentum, you could go for the inside and down. If we were to get above today's high tomorrow, it's not necessarily the end of the world, but ideally if you want to be a bear on Palantir, you don't really want to see this thing get back above 174. What you want to see is it stay below 174 and have this 80 EMA catch up to that price. If that can happen, it's really starting to confirm that it failed. So it's refusing to break the 170, but it's extended into it, and the market had bounced back so well on Friday that I'm not concerned by how well it's holding 170 just yet. So we'll continue to keep an eye on that one. Have a great night, everybody. See you all tomorrow.